This is an Uncovered Japan Company research report on OXIDE Corporation, ticker 6521. OXIDE grows exotic single crystals and builds the deep ultraviolet lasers that help inspect advanced semiconductor wafers. Its technology moat is unusually strong, but the investment case is defined by a stretched balance sheet, volatile profits, and a valuation that already prices in substantial future success. The report is dated July 6, 2026. OXIDE estimates roughly 90% world share in the wavelength conversion crystals used for advanced chip inspection, while about 75% of revenue comes from overseas. Yet the equity ratio is only 30.7% after debt-funded expansion. At the report date price, the stock traded near 98 times and about 12.5 times book. That combination makes execution, cash conversion, and financing central. OXIDE is a deep tech materials company rather than a conventional component assembler. It grows low-defect crystals, processes them into optical elements, and integrates them into lasers and modules. In semiconductor inspection, these materials generate the deep ultraviolet light used to find tiny wafer defects. In healthcare, scintillator crystals convert radiation into signals inside PET scanners. The same crystal growth expertise supports newer work in silicon carbide, quantum communications, and gallium oxide. The revenue mix has two layers. Semiconductor inspection accounts for about 56% of sales and is the main growth and profit engine. Healthcare PET crystals contribute roughly 24% and offer steadier structural demand. New domains, including silicon carbide, quantum, and gallium oxide, represent about 20%. They carry considerable option value, but much of that activity remains in research, prototypes, or early commercialization, rather than mature recurring profit. OXIDE's moat has three reinforcing layers. First, its continuous charging double crucible growth method is accumulated process know-how that rivals cannot easily reverse engineer. Second, components qualified into always-on inspection tools may remain there for 5 to 10 years or longer, creating high switching costs. Third, major customers including KLA, Nikon, and Lasertec are shareholders and co-development partners. Maintenance after design-in then adds a recurring revenue stream. This is a physical and relational moat, not simply a brand claim. OXIDE has proven that it can grow the top line. Revenue rose from about 4.8 billion yen in fiscal 2022 to 10 billion yen in fiscal 2026. Profitability has been far less reliable. Fiscal 2024 produced an operating loss, while the fiscal 2027 forecast points to a recovery toward 930 million yen of operating profit and a 9.5% margin. The investment case requires that recovery to persist beyond one forecast year. Cash flow is the clearest financial warning. Free cash flow remained negative throughout the charted period, with an especially large outflow in fiscal 2024, as OXIDE funded the Raycall acquisition and new plants. Some of this spending builds future capacity, but repeated external funding weakens resilience and raises dilution or refinancing risk. The key proof point is not only higher accounting profit. OXIDE must turn that profit into operating cash and reduce the need for debt-funded growth. The balance sheet shows the cost of expansion. The equity ratio fell from roughly 53% in fiscal 2022 to around 31% in fiscal 2026. Return on equity then swung sharply negative as impairment and divestiture losses hit net income. OXIDE pays no dividend and has no buyback program because management is reinvesting every yen. That stance is coherent for a growth company, but it leaves shareholders without an income cushion if commercialization takes longer than expected. Management's strategy is a two-layer plan. Defend and scale the current engines in semiconductor inspection and medical imaging. Then use their revenue and research platform to commercialize solution-grown silicon carbide, quantum photon sources, and gallium oxide. Artificial intelligence infrastructure supports chip inspection demand, while electrification supports power semiconductors. The direction is credible and well-aligned with macro trends. The uncertainty is timing. Promising national project technology must become repeatable commercial orders before financing pressure overwhelms the option value. Traditional valuation measures are difficult here because earnings are only beginning to recover. Price to book gives a clearer historical reference. At the report date, OXIDE traded near 12.5 times book, above the approximate range shown for the prior 5 years, and well above the fiscal 2025 trough. The market is therefore paying for the durability of the moat and the value of new domains, rather than current cash generation. A strong technology story does not automatically mean a forgiving entry valuation. These are the report author's illustrative scenarios, not recommendations or price targets. The upside case needs the core semiconductor business to execute and at least one new domain to become commercially meaningful. The downside case reflects commercialization delays, continued cash burn, financing strain, and valuation compression. The base case is much less dramatic because the current price already captures substantial optimism. Investors should watch orders, margins, free cash flow, balance sheet repair, and concrete customer adoption. To conclude, Oxide owns difficult crystal growth technology, deep customer relationships, and exposure to powerful semiconductor, medical, and electrification trends. The moat is real. The unresolved questions are financial: volatile margins, negative free cash flow, a 31% equity ratio, and a valuation that leaves little room for delay. The decisive signals are sustained semiconductor orders, cash conversion, balance sheet repair, and named customer wins in new domains. For the full evidence, assumptions, and sources, continue with Uncover Japan's free deep dives. For a much deeper look, visit the free deep dives at uncoverjapan.com. We go beyond the headline numbers to cover the business, financials, valuation, risks, and catalysts. This video is for information and education only. It is not investment advice or recommendation to buy or sell any security. Always do your own research.